Everyone, and thank you for joining us on this earnings call organized to discuss the Q2 FY21 financial performance of Everest Kanto Cylinder Limited. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q2 FY21 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings of this call. Over to you.
Good evening, everybody. I warmly welcome you to the Everest Kanto conference call today. We are going to be discussing the Q2 results for FY21. I would like to just start on beginning on about the brief history about the company. We started this company in 1978. This company has a decade of 4 years of decades of legacy as a global leading manufacturer of seamless gas cylinders. Till date, we have manufactured around 20 million high-pressure gas cylinders and CNG cylinders in service. We have 2 locations in India, 2 locations in Dubai. Our location in India is in Tarapur outside Mumbai and Kandla SEZ zone. In Dubai, we are located in the Jebel Ali Free Zone. We are also located in US, Pittsburgh. Our total capacity is about 900,000 cylinders per annum. These products include industrial cylinders, mainly the application is medical, oxygen, hydrogen, and CNG cylinders for compressed natural gas. We also make tube trailer cylinders for large application and large transportation of gases. Our also focus is in aerospace, defense. Given its strong position in Indian market, wide acceptance and several international markets built over a decade of 4 decades, we are poised, to continue to increase our presence in the CNG segment, in the automobile segment. Just to give you a little highlight on what is recently happening in the business. As you know, the government of India has recently announced the 9th and 10th bidding rounds of the CGDs. And that gives a lot of opportunities for a lot of gas companies to participate in this round of bidding. Government is also planned to have around 10,000 CNG stations in the coming 5 to 7 years. This will be widely spread all across India. Presently, main of the CNG infrastructure is based out of Maharashtra, Gujarat, and around Delhi NCR area. So we believe that CNG business and the CNG fuel vehicles are going to be growing in large numbers. There are also a large need for infrastructure on CNG stations. As today, a lot of challenges that we face with COVID. As you know, COVID is a lung disease, and medical oxygen cylinders are a need. And the first defense to this disease, we are kind of obliged and privileged to be supporting this fight against COVID, and supporting all the hospitals and government health ministry in supplying our medical oxygen cylinders. We have also our operations in UAE. We are targeting more markets in South America, Middle East, Europe. We have also our business spanned out in the US, which is largely focused in government and defense supplies. We see business improving going forward on international operations. We have current capacities and headrooms to grow in those businesses. I would also like to put a little highlight on the financials. Consolidated, we grew around 37% this year on year, with equal contribution from CNG and industrial demand. CNG includes businesses like auto OEMs, cylinder sold in the aftermarket, the gas infrastructure business. Industrial segment includes our healthcare segment. Our EBITDA margin expanded from 8.6% to around 17%. Improved in the product mix, operating leverage from a greater scale achieved. EBITDA stood at 43.6 crores as against 15.6 crores in Q2 FY20, As discussed earlier, our strong performance was driven by a wide range of demand dynamics in India and some improved businesses in overseas subsidiaries. At the profit level, we see significant turnaround from the last year. PAT during the quarter stood at 29.5 crores against a negative of 1.8 crores in FY20. The cash flow from the operating expanded in the first year to cover the working capital required to drive growth, while the process of debt reduction continued to be overall on the consolidated basis decreased from 294 crores to 255 crores from the first 6 months of FY21. We firmly remain committed to rationalizing debt demand on continued cash flow generation and operations. With strong momentum in performance and achieved in the first half of the year, we maintain positive outlook going forward as well. EKC is well-established player in the high-pressure gas cylinder segment. We feel the demand continues to be in medical equipment, in automotive segment, all across the economy, the product on all applications. Many demand drivers are there for the business as we cater to a large audience of customers. I think I come to an end, to the opening remarks that I've given on the operation and strategic led. If any other questions, Q&A, please let us know.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vijay Sarda from Cressida Investments. Please go ahead.
Hello. Yeah, congratulations on good set of numbers. So my question pertains to 2 things. One is on your overseas subsidiary, how things are shaping up there, and if you can just dwell more on the transaction that was to get completed 2 years back on the Chinese subsidiary. What is the status on the same? And secondly, on the same on the Thailand side. And if you can just dwell on the performance of each of the subsidiary. Secondly, sir, just looking at the overall trajectory of the CNG market as well as the opportunity size in India, can you just give a brief on how the competitive intensity is there on the ground and how things will shape up? Definitely we can see good amount of announcement coming up from the government, but eventually till time there is a directive from government to compulsorily go for like what they have done in Delhi and other places. I think the in public, like basically whatever we can see in general, local transportation, public transportation as well as the taxis and all that go in the initial round, and then subsequently once people see the infrastructure around, then they go for the CNG. So how is your experience if it get expanded to multiple cities? How fast the demand will come up for you? Thank you, sir.
It has been around since 95, 97 was when we started. So, I feel that the industry now has come to a lot of maturity over the years. So a lot of regulatory, infrastructure, technology, stakeholders, all these things have come together, and now we have a much more mature industry, and the government's policies, that has been primary driver in the last 3 years, where all the CGD business has been licensed in a very systematic manner. Government is going out and, we are in the 9th and 10th bidding rounds now. And a lot of changes during, over the last 10, 15 years on how these things are to be done. So, we are in a, today when you see this, you're actually a lot of work over the last 15 years from the government, also making natural gas available in every town, city, laying trunk pipelines. This is a much more mature place now as per regulatory framework, pricing of the product. So I think going forward, lots of big players now participating in the CGD business. So it shows a lot of seriousness, that is coming in, and a lot of the kind of investments that are being made in the sector. So it seems that we are in for some long term now and more sustainable growth that we can see in this business. I think your question was on the subsidiaries. So international business has, because COVID has been a thing that has hit the international business. So and this quarter definitely looks that things are improving now. Business is coming back well. Dubai is doing fairly well. They continue to pick up because international business will continue to come back. And similar situation should be in the US subsidiary also, where we feel that they have the orders in place. They have this business is fundamentally quite strong, and we feel that it's just a matter of time when you'll also see the US subsidiary come in line with expectations.
Okay. Sir, what's happening on this subsidiary? The money is come to escrow account, or what is the that?
So on the China front, we are very close. What happened was there is a lot of regulatory framework that we needed to go through before we could get this money, and plus the COVID situation didn't help. These delays. So I think now we are very, very close on closing this transaction, and we are hopeful that this thing should be done now. This is, I think, a done deal now. It should happen very soon.
Okay. So just last thing in terms of the overall margin and business. So what we have seen last 10, 15 years of our listing history, first 5 years we did well, margins were quite okay. In between there was a patch of 5 years where we have not been able to perform the way we expected, and last 3-4 years has been very good. So how the situation?
So, like I said, see now what has been happening is, now the one thing is the economy. Economy has been doing extremely well.
Sure.
Second is the CNG, the entire gas government focus on having a gas economy, and a very structured. If you look at how this entire gas infrastructure and how CNG and other things were seen in the past 5 years back, and now in the last 5 years, the way in a very structured and a regulatory framework the things are working, in a very any CGD you pick up who has been awarded licenses, you see the business plans are in place, the investments are being placed, and the investments are being done, and you have PSUs who are participating now in the CGD, which was was not so much. Now you see a very, very serious kind of investments going in here. So it's completely changed, more mature. Industry is much more mature than you saw it in the past. So we are quite confident that it's more sustainable, and I would say we are just at the beginning. India today, you might have say around only 3,000 CNG stations.
Yes.
And going forward, every day CNG stations are being built in the country. So going forward, this infrastructure continues to grow quite rapidly.
Okay.
Yeah.
So just last thing, I think last question from my side. Can you just spell out your debt reduction plan, and do we need to do capex or next 2-3 years if we grow by 15-20%, 10-15% also our capacities will take care of?
So debt, if you see debt has we've already reduced debt by 50 crores this year, and that continues to be. I think long-term debt is more or less going to be gone soon. Yeah. Maybe next quarter it will be gone, and that's been the real initiative that we've been taking, and we are continuously seeing. And today I don't think that's much of a worrying factor for us anymore. Going forward also we don't see that much worrying. As far expansions are concerned, we are reviewing it. We are looking day by day how things are improving, and we are definitely going to be looking at something around maybe somewhere around March, when the board takes a call on what they think going forward on the expansion plans.
Okay, fine. Thank you very much.
Thank you so much. Thank you.
Thank you. Before we take the next question, we'd like to request participants to please limit your questions to 2 per participant, so that the management is able to address questions from all participants in the conference. We take the next question from the line of Rajesh Agarwal from Moneyore. Please go ahead.
Sir, my first question is on Dubai. Suppose the demand in India far exceeds the supply. Can we bring in CNG cylinders from Dubai and supply to India?
See, what happens is usually, these products are very, very local and local market kind of products. We don't move much of steel around. And, more of the customers like just the delivery just in time.
Okay.
So it's, and the product mix is so much that, it can get quite complicated, to try to import the product, then bring it. The customer also, doesn't feel very comfortable having to import the product.
Okay.
When he's getting it available in India. So our initiative is continue to, make it as much as possible available here in India.
Okay. So, and second question is USA. USA has been making a loss for 5-6 years. How soon you feel the US may turn around, or we have anything to dispose of the plant of US? The capital employed is 200 crores. We are making a loss of 20 crores, and then we are paying 20 crores interest on that. So if US itself goes away from the company, we can save 30 to 40 crores a annum. So what is your view on that?
Definitely like this, this company used to be, like I said, was it has a very good product line. It has a very good business line, good customer base. So it's just going through a little bit of a difficult period, and now, in a difficult period, you try to sell your business, or you try to do anything, will just kind of not fetch you anything much. Further, we believe in the business. We believe that there is value here. So I think we just have to, yes, definitely, we have to work on the cost and try to reduce the cost as much as possible to, bring profitability, not bring too much burden to the book. That is definitely the initiative. And, once we are back and the business is back to doing well, I think then all options can be explored. And, so at this moment it's too early to make any rash decisions.
Okay. So what is the issue? Order book or the turnover? There's no operating leverage. Why are we not at least breaking even in that business?
See, I think, what has happened is they have a lot of orders which have been held back because of, governmental issues related to defense and other things. So the order book is good. The order book is not an issue. Only thing is, it's kind of in delay. Maybe because of COVID, maybe government project delayed. So because this company deals a lot with U.S. defense, with NASA. There are a lot of projects they do. So a lot of things have kind of been delayed. So that's the reason why we are facing some kind of this kind of scenario in the U.S.
You feel it will turn around soon in next 6 months, 1 year?
Yeah, surely, it has to, definitely, it has to turn around.
And the next question is, suppose the raw material starts going on, can we pass on the raw material now the demand scenario is improved? Can the EBITDA margins sustain?
Yes, so what happens in our case is, because we are dealing with most of the automobile industry, they do appreciate any dollar rise, and any raw material increase. They do appreciate that, and we've been kind of lucky because, our raw material steel prices hasn't really shown a huge spike, sudden spike. So it has been very, we've been lucky that, the hikes have been very, very small. So, it is not, and the supplier base is also quite decent. So, we are able to get very competitive pricing and stable pricing for a long time. And also, when we are in a cycle, when I'm in a cycle, I am, somewhere around 3 months in a cycle, or 4 months usually. So, I have the customer, we have at least 4 months before a shock can be given to them.
Okay.
Yeah, only dollar is something that, we have to keep giving the customer shocks, when they move. But otherwise, as per raw material pricing, that can be, because, when we are dealing with the automobile industry, we can't just be giving them shock every month. We have to also give them, every quarter, if there is an increase, we have to come back to them every quarter, and so we get enough time, and these seamless steel tubes, our raw material doesn't move, so drastically. It's not like a regular commodity. Okay. We are not a regular commodity product. It's a very specialized steel product. So it moves in a little very structured and a very in a very systematic manner. So we don't get too impacted very quickly.
So any scope of improvement in working capitals, inventory, receivables? Is there a possibility of
course, there's always scope and improvement in everything, and we definitely, that is the initiative, that is the continuous initiative that the company is taking, in improving all areas, wherever we can, because, as we grow, the faster we grow, we need to keep these things in check, on raw material, in working capital, in cash flow, receivables. So all these things are, our finance team, our marketing team are, on continuous basis, because now everything is increasing month on month basis. So we need to be quite aware on our planning and collections and, everything, yes.
That was the last question. What is the capacity utilization in percentage terms in India? Is there any capacity here?
So I would say around 85%.
Okay. So then we have to do a capex maybe in another 6 months?
That's what we will need to, we have some headroom. So, we will definitely review that maybe in the March board meeting.
Okay.
That, what we want to do, what is the strategy for the company. But I think we have headroom, so, we are not much panicked that we need to expand.
Okay.
And, every expansion will take time, money, so it's a decision that we need to take in a very, thought out process, because if I plan, what I'm focusing today is more debottling, wherever I can debottle, what I can get quick results, in a quarter. So, anything long term will have, its long term benefits and impacts.
Okay. And so last 2 quarters we have seen a demand from oxygen, or it has to be from CNG? It's a mix of both.
It's from both. Last quarter has been the CNG is coming back, and the first quarter was lots from medical.
Thank you.
Yeah.
Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good afternoon, sir, and congrats for a good set of numbers.
Thank you.
Regarding the revenue breakup, if you could give us some sense, what is the current revenue breakup between, say, auto, medical, and industrial, that would be very helpful.
So I would say around 50-50% you can take. Our auto and industrial is 50-50%.
And how much will be medical?
It would be a part of the industrial. I don't have the numbers with me, but it would be some portion in the industrial, some part of the industrial.
Is it large because of COVID we could have seen some significant increase? So is it contributing a large part of
there has been a significant increase due to COVID. Also from the medical segment, yes.
Okay. Secondly, you mentioned regarding the CNG being a very big opportunity. Can you just tell us a little bit about what is like the addressable opportunity because of these various initiatives being done by the government?
The government,
who are our key competitors and how are we placed in terms of competitive positioning to capture that opportunity?
See, PKC has always been a leader for the last 4 decades, and our focus has been on product development, customer relationship. Today, the company has, our 90% business is all to multinational companies. We have great relationships. Being a regulated business, lots of approvals, lots of agencies involved in approving the products. Lot of work goes in development. So I think we have a competitive advantage, in this line, and competition is always around. So we've been, competition has always been there, but we have been able to successfully continue to take our leadership position. As customers always prefer, better service, better quality, better pricing. So we've been able to do that with the large scale of infrastructure that we have. Did I cover everything you said, or I missed something?
No, my main question was
the opportunity. What's happening is, like I said, this industry has been, it's in work in last 15 years. So lots of work on regulatory framework, government initiatives on gas economy policies, and Now, government has already targeted that they want to go from 3,000 to 10,000 CNG stations, which I see that might even exceed the 10,000 CNG stations. In a country like India, I think, our neighbor countries, have 3,000-4,000 stations which are much smaller in size as per vehicle population. So, I think Indian potential on the CNG front is massive. We have so many cities, so many districts, so, population, vehicles, the need for infrastructure. So I think that the opportunity is, enormous in India. And the policy of the government is very clear going forward. With Euro 6 coming in, I feel even more positive on the CNG front, because CNG becomes a more viable fuel, because with Euro 6, the petrol and diesel quality has to be much better. Vehicle costs will increase. With CNG, nothing changes. For the last 20 years, CNG is going to be the same fuel. So, not much investment in technology needs to be done. Technology is established. Vendors are available. Everybody is ready. Industry is geared up to deliver. So I think it's a great time, for this industry.
But can you quantify, is it like 5,000 crores, 10,000 crores? And secondly, what is our market share?
It's difficult to quantify that way.
For pump, what is the requirement of cylinder or something like that? That would be really helpful.
I don't have those numbers with me, and it'd be difficult to quantify. But everything is available in our data. You can go through the company data in the last 3-4 years. You can get that. Everything is available on how the numbers have gone up, and because I can only comment on what I am doing. I can't comment on what the other people are doing. So you might be. I can. This is the overall picture. And that will give you a sense of where this industry is going.
What would be our market share in India? Would you have any sense of that?
I think our market share should be around 45-50%.
Wow, that's very nice. Just one last question on subsidiaries. This money that we receive from China.
Yes.
And you also mentioned that in US, this may not be the right time to look at exit.
Yes.
So, secondly, in case of US, do you intend to eventually exit once it becomes profitable, or you continue to believe in the long-term potential?
Again, this is doing well. Why would we only have one business, that's manufacturing cylinders. So exiting something would be this is our core business. This is what we do. We do nothing else. So, exiting would be really a big decision that we'll have to take, because we are not able to, we don't see a future in this business. We do see a future, and this is something we do understand, and this is the, core business that the company has. So, that decisions, are difficult to take, maybe at a later date, just because the business is doing bad, but it has done well. We understand the business. We believe in the business. And, going forward, I think this, because the order book is there. See, we believe only because there is a genuine order book exists in this business. It's not in the US business. It's not something that we are hoping will come. It's delayed. We are just delayed.
And the China money will be used for debt reduction, right?
Yes. China money will be reduced for debt reduction, and yes.
Thank you.
Thank you. The next question is from the line of Anil Kumar Sharma, who's an individual investor. Please go ahead.
Sir, congrats. First of all, congrats for your good numbers. My two questions solved. I have two more questions. One is, sir, there is small stigma on the company. One credit agency is frequently giving in the press that we are not cooperating. After that is maybe the reason institutional investors are not coming in. Can please throw some light? They are repeating every year. They say we are not cooperating. That though there is a small amount. Number two.
Yeah. So let me reply to this first. I don't know why somebody carries that impression for us as being a listed company. We are a company. And now, I think I don't know I don't know how to comment on that kind of remarks that are coming where we are not cooperating. I mean,
we should take up with that. As I said, there may be the reason for company is doing very well, that we know. We congratulate that also, but it is coming in the press, so that may be the reason institutional investors are not coming. So
definitely again look at this, this kind of thing. We'll take a note of this and see why is this coming and who are putting these remarks, and we'll make sure that such things don't come up again, because we are very open to being asked any questions, cooperating with anything that we are allowed to give. Maybe he needs information that we are not allowed to disclose, but we are having conference call every quarter.
Yes,
we are giving information to all our investors. We are also informing the stock exchange about the results, about the further information also. We are putting up presentations. So we are trying to disclose as much as possible.
Improving day by day. But the thing is, it is improving day by day. We are thankful to you for this also. Sir, my second question is, medical cylinder business is going good, but is it temporary? What do you think? Is it temporary or it will continue after Corona? It may diminish. In that,
I think a country like India, medical infrastructure is anyway much lacking behind. So I wouldn't say it will disappear, but definitely because of COVID, there is a surge. It will definitely come down. It will definitely come down. But for us, this is just an extraordinary push. But other business segments are also growing simultaneously. So company will not be affected too much, even if this is coming down, because we have other segments which are growing quite well, and as everything in the economy opens up, all our segments will start doing well, and then like specifically, I could just highlight this quarter. I think medical oxygen is there, but it is not. It may be a very small. And you have to keep in mind that the value that we get on medical is not a very high value added product.
Right.
So there are other very high value added products that we are doing in CNG segment and other industrial gases which are much more high value. So definitely it is adding value, and in the first quarter actually it helped us a lot. Getting through the difficult times, it did help us. Yeah. But
sir, my last question is, we are not having a Maruti as our client. Is it so, or they are having some other source? It is a very big source. Is it possible to?
We are in continuous touch with all OEMs, and we are supplying to almost all OEMs in India except Suzuki, because Suzuki already has two vendors. Because when they started the production of CNG vehicles, the demand for the vehicles were very less. So, they were stuck with two vendors, so they did not want to introduce more vendors. But as their demand increases and they want to introduce a third vendor, definitely, we will be the preferred vendor for them.
Right. And then takes time also, that we understand. Yes.
It takes time also. Yes. Sir,
it is a nice, very good numbers you have given. And the fruits of the senior Khurana sir are coming now. Thanks to that.
Thank you.
Right, sir.
Thank you. The next question is from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks for taking my question. Can you please tell me what is India specific capacity? How is it utilized? How much is it utilized? And second thing, in case if there is incremental demand and we need to put up the capacity, what would be the incremental capex we need to do? And if there is any thumb rule, do guide about that.
So, at this moment, I think we are at around 85% of our capacity.
How much is the capacity?
80% capacity we might be at, and...
How much is India's specific capacity?
So, India's specific capacity may be around...
700.
About I think 7 8 lakh cylinders, I think, per annum.
Okay.
Yeah, I think... but what happens is, this is very fungible. It is very difficult to put a number on these because, we have such a wide range of products, from industrial to CNG to, different kind of products, So when you put a number to it, it's very difficult to say that this is the capacity, because we will decide on the high value added products, So it's kind of it can grow to quite a large value than just looking at these numbers of quantity as the capacity. And your question on laying an investment, an investment could be in the range of large. Yeah, I think anyway I think I've answered that. We are going to debate that later. In the March quarter, what our expansion plans are, and again, like I said, expansions take time and money, and the market. So what my objective today is just to debottle. We are just trying to debottle and grow the business as much as we can. Instead of just promising the investors on a new investment that is going to come and going to yield us more profits and other things. I would like to tell you that we are going to grow from here, and we can, we have some headroom to take up this market.
Okay. Can you please tell me who are our competitors? If you could name the two vendors who are supplying to Maruti.
I think there is two companies. One is the JFE and one is FJM.
Okay, sure. Thanks.
Thank you.
Thank you. The next question is from the line of Avinash Prabhu from Maruti Equity Research. Please go ahead.
Good evening, gentlemen. Thank you for this. Congratulations on good quarter performance.
Thank you.
Yeah, I would just like to understand where are we placed in terms of order book over the next 12 to 18 months on a consolidated note from in India and abroad as well, other countries. Apart from that, the value in terms of the total contract and the marginally increasing cost of raw materials or anything, and the Make in India where we are placed. How exactly we look at ourselves for the next 12 to 18 months.
So I think the order book, I could say, is up to 6 months order book is there across subsidiaries and India. I'm sorry, the other question that you had on something on the cost, I think I heard.
Yes, the order book for 6 months. Can you give it a number, please?
I don't think we'll be able to give any numbers on that, but definitely it's strong, strong order book.
Something what we have been in the recent quarter?
I think covers 2 quarters. It covers 2 quarters, yeah.
Okay, similar performance which we have right now for the next 2 quarters. Something on similar grounds. Okay. I was asking you, what about the costing in terms of the raw material and the value, and trying to understand what the margins that we look at in terms of different, because we as a company are providing cylinders to hospitals as well, and industrials as well, and CNG as well. So different products, different set of customers we have.
So margins, I might not be able to give you any idea on the margin front, as this information is confidential. But I can only tell you that the margins on CNG are higher, and as the costs are concerned, the raw material is quite stable in nature, and we are able to forward the raw material plus any currency fluctuation to the customer.
Okay.
So that way the margins don't get affected too much.
Okay. So what is, can I just get a idea, because I was just trying to understand things. Because I know it's a little tough for you also, because you've been trying to tell this for quite some time, because you have diverse, you're serving diverse, verticals of customers. So, because how much is been on the COVID front for hospitals and how much is going to be something on the CNG front, because we are expecting a big set of improvement in our CNG performance because of the government planning to have another 10, in total 10,000 stations across the country. So
like I told you, the first quarter had a lot of medical oxygen cylinders, and the second quarter had much lesser because, our CNG business had come back and we were able to cater to most of the CNG business. So medical took a back seat and was, a part of the industrial business. So, I feel this is more of a sustainable in nature, what we are doing now, going forward.
So CNG has been a current, actually on the forefront CNG as compared to what it's been in the previous quarter. So the margins are more improved because of CNG performance.
Margins are improved and the value of CNG products are much, much higher.
Mm-hmm.
Much higher.
Right. Thank you, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Ilesh Gopani from Gopani Securities and Investment. Please go ahead.
Sir, thank you for the opportunity. What is the gross debt and net debt as on 30th September 2020 of short-term and long-term both?
I think you're talking about consolidated basis?
A consolidated basis.
I think the debt. It's 202. It is 202. Out of this 202,
gross debt is 202.
202. The long-term debt is around 43.
Gross debt is 202, and out of 202, 43 is long-term.
Yes.
And what is the net debt?
On a console basis. This is on console basis.
What is the net debt after the cash balance and everything?
This is the net debt only. I think this is net. This is net only.
This is net.
This is net.
So out of the money that you receive from China, 100 crores. So are we going to repay 100 crores full from the gross net debt?
Yes. I think lots of it will go into reduction of this only.
Okay. So what is the working capital cycle and how much in our sales is exports and local?
In India, 90% of our sales is local.
Okay. And what is the working capital cycle?
Time taken from. Yeah. Out of. So I think. So what do we? 90 days. I'd say 90 days.
Working capital cycle is 90 days. Sir, you did not answer the question on how much money we require for putting up a similar plant in India. So we can guess what are the entry barriers in this industry.
Give that answer. The investment would be in the line of around 100 crore rupees for setting up a new plant.
What capacity?
The capacity maybe will give you maybe 2 lakh cylinders.
Okay.
Yeah.
And sir, what are the sustainable EBITDA margins in this industry? Because our EBITDA margins are constantly fluctuation in many.
I think we have very decent. I think we have very decent EBITDA margins, and they're not very extremely high. I think we can sustain them. I don't see any.
So what are the EBITDA margins that we can sustain quarter to quarter or year to year?
Consistently, what we are doing today, I think consistently we should be able to sustain those. Yeah.
And this last quarter results, 17% EBITDA margin is a sustainable figure.
Yeah, I think that's quite sustainable. Yes.
Okay. Thank you and best of luck for that.
Thank you so much. Thank you, sir.
Thank you. The next question is from the line of Bhavin, who's an individual investor. Please go ahead.
Sir, my question is, are we using a 2-shift or a 3-shift capacity for the current plant? Because whenever you plan to ramp up the capacity, will we see that if the production in the same plant can be done in 2 shifts or 3 shifts rather than going for the altogether a new investment?
Yeah. So at this moment we are doing it 2 shifts, the plant.
Okay.
Yeah.
Okay. And is there any possibility that rather than putting new 100 crores or whatever that amount may come in March or in future, can we do a 3 shift or a 2.5 shift?
That's what we are doing now. So that's what we are doing now. We are doing everything to debottle, whatever we can and get quick results in quarter to quarter. We don't, because large investments also we have to wait before we start getting results out of them.
Yeah.
Okay. Yeah. So that is the objective right now. But if the business continues to sustain and this market is looking so strong, eventually maybe we will have to take that call and make these investments that will be required going forward.
Okay. That answers my question.
Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much for the opportunity. So just wanted to understand, since you have been talking about a great opportunity in the CNG, even the industrial segment is doing quite well. So what sort of revenue growth are we looking at on a sustainable basis for next 1 to 2 years?
I think 15 to 20% should be, something that we can sustain.
15 to 20%. Okay, fair enough. And you spoke about EBITDA margin sustainability at 17 to 18%. So is there any effort that we're doing to improve upon that, or is there any scope that we can further improve?
No, sir, definitely the initiative is there to improve that, reduce cost and, we are definitely, and as the capacity, if we are able to debottle capacity, definitely these margins will look much better. But, something that, unless we've done it, we cannot comment on it, so we all, all efforts are there to do that, so that's why I don't want to commit anything that, if we are not able to do. So I think that this can be sustainable. We can sustain this.
And by when you're targeting debottlenecking, or is there any plan for that?
It's a continuous process. See, this is a continuous process that we keep doing, But, everything takes time, because these are, our facilities are quite large and, anything, because we've been doing this manufacturing since a long time, so changes, any kind of changes and this and that, take some time, because you do not want to disturb the existing infrastructure. So this is, it takes time, so whatever, but we are trying to do everything what we can do, find quick results with, in time. We don't want to, wait too long to get results.
Okay, sure, understood. That's it from me. Thank you very much.
Thank you.
Thank you. The next question is from the line of Surit Deora from Paladin Capital Management. Please go ahead.
Yeah, hi Puneet. I was tracking the company a couple of years ago, and I recollect, I think sometime in 2018, the China transaction was concluded.
Right.
Some of the money was supposed to come to India and some was supposed to go to the UAE. So I don't know if you mentioned this in the early part of the call, I might have missed your comments, but what is the reason for the delay? Why has it taken more than 2 years for that money to come?
So when we signed the SPA, we were not sure on the kind of regulatory framework that needs to be done in India and in China. So that took away a lot of our time. NOCs from banks, a lot of formalities that were there, to do this transaction. Then, this, COVID situation didn't help at all, to further, delay this deal. But we feel now, we are there. I think, but we are in continuous touch with the buyer. He's very positive, and and the economy in China has also improved substantially, and they're doing very well. So he's quite optimistic that he'll be closing in very soon on this deal.
And is it correct that the amount was about 97 crores and about 60 odd was supposed to come here and 30 odd to Dubai?
Yes, correct.
Okay, and there was also the equipment which was in China, and that equipment was to be used in India later.
Yes. So there will be equipment available to us for us, when we are done with this deal.
So that equipment is currently in China, and that is, do we need to pay, is there any any money that has to be spent on that, or can that itself be used in the
the entire equipment not be coming, because this kind of equipment will not be able to easily move from there. So some equipment will be coming, but I don't think we'll be spending much money on bringing this equipment. No, it will not take. So we'll be able to bring what we can bring. What we can't bring, we can't bring.
And will that take care of the expansion plans that you might talk out in March, or will you have to spend money on?
It will definitely help, going forward.
Okay, and there was in India, there was a high cost Yes Bank loan. Is that now done, repaid?
Yes, more or less, yes, done. Yes, more or less done.
So this 202 crores of gross debt or net, whatever the debt figure of 200 odd crores, how much of that is in India and how much is abroad, and what is the cost of that?
Sorry, say that again. Sorry,
the 200 crore debt number, how much of that debt is in India and how much is in Dubai?
India today debt is around 122 crores. Sorry, no, we minus 80, sorry, to 81 crores.
So out of 200 crores, India is 80 crores.
Yeah.
And the balance 120 is in Dubai or in the US?
It's in 64 in Dubai and about 60 in the US.
And is there any
long term in this is only, I think, about 43 is long term.
Which is in India?
50-50. No. The long term in India is only 27.
Long term. So, and the remaining debt, whether it's in the US or Dubai, is that all working capital?
More in the US.
That's all working capital?
Long term, I think Dubai, nothing is left now. Long term, nothing is left. It's only in the US that we have long term, and in India.
Okay, so there's some long term debt in the US and there's long term debt.
I think you just have to another maybe. It will be gone. Maybe in a few months it will be gone.
So let's say the money from China comes in the next 12 months. Where will that get utilized?
We'll obviously it will bring all this debt down. Put in the business, bring the debt down.
Okay.
Yeah.
Okay. And there was also this issue sometime in 2018. There was a news snippet about some CFO who was a whistleblower and a forensic audit that happened around that. Could you just give an update on that?
That's all behind us. Company has replied to everything that came up, and everything was clear. And we got completely clean sheet from the bankers, from everywhere, that they didn't find anything that was that was being said about the company. So everything was quite clean.
Okay. All right. Thank you.
Thank you.
Thanks.
Thank you. The next question is from the line of Keshav Garg from CCIPS. Please go ahead.
Sir, first of all, I wanted to understand that we have been doing around 30 crore upwards profit after tax since past 2 quarters. So you think that we can sustain this run rate going forward?
First quarter there was specific. I'm sorry. I didn't hear that. Can you just say that again?
Sir, yes, sir. So basically, I'm just trying to understand that can we repeat the Q2 performance, the 32 crore PAT that we made? You think that we can sustain this every quarter going forward?
I think yes. I think the business is quite strong, and I think we'll definitely strive to do it. Yeah. I mean.
No, sir. What I'm trying to understand that maybe because of this COVID situation.
COVID is not not really. No, like I said, 50% of my business in the last quarter has come from CNG. And CNG being a higher margin product, in medical oxygen in the last quarter has been, it's been there, but it hasn't been a very substantial part of it.
Okay, so no windfall from oxygen cylinder part of business.
No, windfall is there, but I think it is not nothing that that going forward, even if it continues to decrease, it's going to affect the performance of the company.
Sure, sir. Very hard.
COVID situation is not going to stay for for a long time, hopefully, and we have a lot of other things, all other segments. See, before in the first Q1 also, the economy was not doing so well, but Q2, economy is doing well. So, all other segments are now coming back, and, so I'm getting business from all my segments now.
Sure. Sir, and also wanted to understand that we have so many subsidiaries abroad, but basically there is no profit over there. So, in our standalone business, the inventory is around 100 crore and it is 2/3 of our consolidated sales, and our consolidated inventory is upwards of 300 crore, and the international business is just 1/3 of our total sales. So I mean, why is there this discrepancy? So basically all our capital is being eaten up by foreign subsidiaries, but all the profit is being made by Indian operations. And basically,
I think what has happened is, because of this COVID situation, like I said, the international business has been affected. So that's why you see a little bit of a pile up of inventory. So it's a matter of time when we see this unlocking. Also, like I said, in the US business, particularly, the order book is there. The business is there. It's just a matter of time when the orders which the product is made to order are going to move. It is just a little bit of a hiccup because of COVID. International business is affected because of COVID. So that's where if you see the top line also of the subsidiaries have been affected because of the COVID situation. Otherwise, this material will be rolling out, and we would see much better numbers. And that's what's going to happen. As we move forward, we're going to see this unlocking.
Okay. And so just wanted to understand that like a decade back, we were in some different orbit of profitability. Like, I mean, even though this year seems to be quite good, it is not even half the profit that we made way back in 2009. So what was happening at that time, and then what went wrong, and now I mean, that situation might again repeat going forward, that this year is very good, but I mean, going forward, we might again fall in bad times. So basically, I want to understand that what went wrong.
So I think 2009, if I recollect, was the time when the subsidiaries, what was happening is we had a large CNG market in Iran and Pakistan. So lots of the profit were coming from the subsidiaries from that time. Now that markets have been affected, because Iran has been affected due to sanctions and foreign exchange issues. So that market really went flat. And that time India was just coming, CNG market was just building up. So we feel that now the subsidiaries are looking at other aspects, other segments in the businesses, and have been able to achieve certain new markets, more sustainable businesses in other countries, and it's taken some time for that. So I feel it's a matter of time that you will be able to hopefully the subsidiaries also will come and give those results. But as for India is concerned, I'm very positive and confident that the government policy and the kind of investments that are going on the ground, the Indian subsidiary will definitely give you these results. So you don't need to worry that that there is another something going to happen. I think we are more we've seen the cycles. We are aware now on the business, much more informed on CNG business, and how it moves. So I think we are in a much better place today than we were in 2009.
Sure. And sir, lastly, wanted to understand that why are we paying such a high rate of interest of 13-14%? I think a company of our financials, we should be paying something like 8%.
Now, see, what has happened is the ratings going to be upgraded. Everybody is looking at the company very differently now, and I'm quite confident that this interest rates and when I'm going to pay off my debts again in the few months, so my interest cost will come down, my total debt will come down. It's already come down. I think this quarter my debt our debt in India was only about 5 crore rupees. I think 4.7 or something crores was the interest that we paid on debt. So this is a continuous downtrend that you're seeing on the debt. So now, like you rightly said, we were feeling the pinch. We have worked on that, and we continue to work with that. So we will only focus on institutions, banks which are going to give us low interest cost. Because we are a manufacturing company and we need to have low cost debt.
Sure, sir. And sir, one last request, sir. Either please write off the amount that is due from China, or then get that money back.
Yeah. No, we'll get it.
People say all kinds of things.
No, I know. No, we'll get it. We will get it.
Thank you.
We will not write it off. We'll get it.
Thank you.
Thank you so much. Thank you.
Thank you. We take the last question from the line of Rajkumar Goenka, who's an individual investor. Please go ahead.
Congratulations, Puneet, on a good set of numbers.
Thank you, sir.
Yeah, actually, the outlook seems to be pretty robust from what I hear. The longer term outlook, actually, not the nearer term. So I hope that, and with foreign subsidiaries also improving, I think the consolidated EBITDA is likely to improve only from what you have delivered in Q2. Is that a fair assumption?
Yes, it's a fair assumption. Yes.
And what could be the downside if I look at a 3-year perspective for EKC? Because
downside is government policy. See, downside is government policy, which has been the past. In the past, our business has been majorly affected. The CNG business is because of the government policies. Government policies have not been. See, now this government seems to be a little bit more focused on the gas economy. Previous governments, there were a lot of confusions on how the gas policy should be started. So I think it's a matter of time, where you mature, and like CNG has spent, we started in 95. So, we've spent good 25 years now with the industry. This industry spent 25 years. So a lot of maturity has come, how the investment should come, how regulatory framework, all the stakeholders are now, in line on what needs to be done. So there is a lot of difference now than, in the past. So I feel
I hear. Given this fact that now the government and the industry has matured and we now know that it's probably an irreversible process.
Yes.
So then what do you see as the downside? I mean, whether it's competition.
That's it. So then I don't see any downside. See, if CNG infrastructure is going to grow, we are already geared up. We have the customer base. We have the right order book. So we have everything in line to gain benefit, because we are the largest in India, so we can definitely gain advantage, we have this edge to gain advantage of this growth. So, I don't see any downside. And, what I see also going forward is in my other segments are also growing. It's not, CNG is one part, 50% of my business, but other 50% is also, growing quite well. So, I feel that, we can, and now continuously what's happened is, debt has been reducing, for the company. So I don't see any, worrying factor for us. Just focus on, growing, and keeping the cost in control. I think if we do not need to do anything, extraordinary. We just keep doing what we are doing, keeping the cost in control, keeping the material in check, cash flow in check. Customer base in check. So I think, if we do everything right, I think we should not have any issues, sustaining this kind of growth or more.
And can competition finish down on margins? I mean, is it possible given our leadership position?
I think if you ask me, the margins are not that high, or anybody who comes in wouldn't want to do business at this kind of margin. So I think the margins are reasonable. I don't know, I don't feel that the margins are very extraordinary. See, everything looks, I don't know, 16, 17% in an industry, because, again, I have a wide range of products,
Yeah. No, I agree. Why
so it's a mix of products that actually, gives us more and more value.
Yeah. Why I ask this question is because of the last few years, and because of the fluctuations that we have seen. But of course, the demand environment may have been very different.
Yeah, it's completely changed. Things have completely changed. In the last 3-4 years, you see, last 3-4 years, I've been very sustainable. See, if you pick up, so it's not something that just happened last year. So if you check the last 4 years, things are being sustainably, as the CNG business keeps growing, I am growing with that business,
Yeah.
So, nothing that, there is no sudden, nothing suddenly has happened, and this is all built up, and, and because the company had the infrastructure, we could take the advantage of this.
Right. And I think one request from my side as an investor is that you should look at the dividend distribution policy now that we are.
We are definitely looking at that. Yeah.
Yeah. Thank you very much, and wish you all the very best.
Thank you, sir. Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you so much, all of you, for all your time and interest in the company. We will continue to stay engaged. We would like to, engage more and more with you people to learn. This is such a learning experience for us also. We'd also like to thank CDR India for arranging this call, and you can contact them also for any further, details that you require about the company. And thank you, everybody, and have a lovely evening. Thank you.
Thank you.